Hi and welcome. My name is Ryan Andrews. I am a principal of Trueline Capital, and I'm excited to share with you about our residential construction lending fund. As an overview, this is an income and capital preservation fund with an 8% preferred return paid monthly and a profit distribution paid quarterly. These combine for a total return target between 9 and 13%. One of the unique things about our fund is we offer redemption rights after a 2-year lockup to investors that want to redeem part or all of their principal. Okay, let's do some Economics 101. We are 7 years post-financial crisis, but there still exists some fear and confusion surrounding the housing market. Mostly because as we start 2016, we are seeing the 4th year of year-over-year price increases. Investors, bankers, pundits, economists, and builders all want to know, what is causing the price increases, and is it sustainable or is it a bubble? Let's take a fundamental economics approach. The data shows the market is demanding 1.7 million new units of housing per year. That is represented by the supply and demand equilibrium point in the center of the graph. But home builders are only supplying 1.1 million units a year, a 35% shortage of supply. This fundamental supply shortage is the force putting upward pressure on prices. The economic fundamentals reveal the exact opposite of a bubble. They reveal a supply shortage that will persist until enough houses are built to meet demand. So why don't home builders build more homes? It's a great question, and that's the core of what we are sharing today. Let's look at how the home building industry is broken out. A quarter of new homes are built by the top 10 national home builders and financed with public equity and debt markets. These companies have listed stocks and bonds. 17% are built by the large regional home builders with access to commercial and institutional capital. But the critical point to understand is that 58% of the market is built by local and regional home builders, and they primarily look to non-bank sources to finance construction. At the microeconomic level, let's look at a case study of a builder we actually work with. This is a family-owned company based in Snohomish County, Washington. This area is famous for being the headquarters of Boeing and the huge gravitational pull of suppliers and industry around them. Home building demand in the area north of Seattle is real, and it is substantial. In 2016, this builder will build almost 100 homes, and not one will be financed by a bank. The critical point here is that just like hundreds of thousands of builders across this country, they have turned completely to non-bank finance solutions. Going back to the macro supply and demand curves, supply, as measured by sales of new single-family homes sold, is charted here. The market is currently 30% below the 30-year average. Why? According to NAR, the primary reason builders are unable to ramp up production is the limited accessibility of construction loans. Now let's drill into demand. Demand is very healthy. One way to measure demand is to see how long it takes to sell a new home after construction is completed. You can see that currently it takes 88 days to sell a new home, whereas the long-term average is 155 days. There are numerous demographic reasons for the healthy demand, a few of which are population growth, millennials buying homes, and a rebounding home ownership rate. But here's the issue. Even with extremely strong fundamentals, home builders cannot obtain construction lending. An interesting way to quantify this is to look at the number of commercial banks over the last 10 years. You can see there has been a 25% decline in the number of banks. But that's not even the whole story. Community banks, the traditional source of construction loans, have been bought out, merged, or just disappeared altogether, and we are left with fewer large banks that shun construction lending. So this is it, guys. This is the key to our business and why it generates persistent risk-adjusted returns. Trueline Capital fills the funding gap in the construction finance market with a pooled lending fund. We meet a key market need for home builders, including non-bank access to capital and an alternative to expensive hard money or individual investor money. Home builders live in a time equals money world, and we offer a nimble and responsive loan program. We are daily inundated with inbound loan requests from reputable builders in strong submarkets. On the investor side, we provide access for investors to plug their capital into this very interesting market inefficiency and earn a high-yield income return with a focus on preservation of capital. Preservation of capital is managed for through maintaining conservative loan-to-value ratios, collateralizing loans with a first lien position on a deed of trust, implementing strict draw management procedures where funds are released as work is completed, and importantly, diversification across projects and regions. Pooled funds are inherently diversified, and sometimes that advantage doesn't get emphasized enough. In the midst of a strong national home building market, our lending region, the Pacific Northwest, is an especially strong story. The Pacific Northwest is anchored by three major metropolitan areas. The first, Seattle, is known for its employment strength, and with 37 days median inventory age, the demand for new housing is very strong. Portland is to the south. Oregon is seeing the strongest net interstate migration in the U.S., and Portland is the center of that. While still very affordable, housing in Oregon is a bright economic picture. Lastly, the Boise Treasure Valley market has very strong fundamentals. Anyone who knows about Boise knows that a business-friendly policy environment has attracted numerous companies to relocate their headquarters and grow their presence in the region. These three metropolitan areas, as well as the numerous submarkets around and between them, provide savvy investors with a historic opportunity to capitalize on the long-term growth of the Pacific Northwest. For a quick overview of how a private lending fund works, we pool capital from individual investors. In turn, they receive monthly income distributions and quarterly profit distributions. They also have redemption rights after a 2-year holding period. Then, with the pooled capital, we market our construction lending programs, we underwrite new projects and originate loans. And we service these loans with a holistic view to portfolio and risk management. Here's the overall graphic of our business. These are pictures of actual projects from our portfolio. Let's dive a little deeper into the operating mechanics. Our prospective deals come through brokers, bank referrals, or directly from our deep relationships in the building community. Anecdotally, one reason we know banks don't do construction lending anymore is because we have banks referring deals to us. We underwrite every loan with a maximum loan-to-value of 65% for spec and 75% for pre-sold. We lend on entitled and permitted land where construction usually begins the day the loan closes. From the borrower, we are looking for track record and ability to bring the house to market on time and on budget. For the project, we are looking for a product that is neighborhood appropriate and is going to sell. We prefer entry and step-up housing over big, expensive custom homes because of the increased capital velocity and decreased carry risk. Our loans have 6-month maturities and are paid back in 177 days on average. We look for submarkets with strong fundamentals, including employment hubs. The servicing side is the biggest portion of the business. There's a lot of operational expertise here. We operate with strict draw management procedures where funds are reimbursed to builders for work that is completed. Lien releases are collected from subcontractors to protect our position on title. We verify all work with monthly site inspections. This is an actual project we financed. 2 key points here. Number 1, we loaned at a 55% loan to value. Number 2, the project was on the market for 6 days and the loan paid off in 156 days. That's a very fast velocity of capital that can be redeployed to other projects. Another example of a project we did. This was an urban infill project with an ADU that is perfect for the Airbnb crowd. This was a pre-sold project, so it paid off the day the certificate of occupancy was obtained. We are an operating team with over 14 years experience in construction finance. This is our 4th fund in this space. My partner and the founder of Trueline Capital, Chris Maskell, has originated over $300 million in construction loans and founded and ran a Seattle-based construction lender called Builders Capital prior to founding Trueline Capital. The second smiling picture is me. Hi, I handle finance, accounting, and operations here. Prior to joining Chris, I spent time in executive leadership and consulting roles at several startups, and before that, spent a number of years in institutional investment management at PIMCO. Lastly, I want to highlight our relationship with Fairway America. Fairway is the industry leader in SBRE, or small balance real estate funds, and provides transparent and third-party financial reporting and investor reporting for our fund. In summary, we are seeking preferred equity investor members into Trueline Capital Fund 2. We are currently in the market. This fund is actively lending. And to be completely transparent, capital is our only constraint. Given the supply and demand functions I showed earlier, that's probably not a surprise to you. This is an income and capital preservation fund that pays an 8% preferred return on a monthly basis plus a quarterly profit distribution, generating a return target between 9 and 13%. Redemptions for some or all of investor principal is available after a 2-year lockup. For more information, please call or email us. My partner, Chris Maskell, is our point person for capital markets. Please contact us. We love to meet prospective investors and share more about what we do. I've seen a lot of industries and I absolutely love this business. There's no better business to be in right now. We have been doing this a long time and we're in it for the long haul. Please contact us. We would love to connect. Thank you and have a great day.